Hi, this is Bronwyn Schoen. I'm a senior wealth advisor with BlueSky Wealth Advisors, and today I'm going to talk about 4 ideas for dealing with appreciated shares of stock. So this happens when the cost basis of a stock, which is the price that you paid for it, is much lower than the fair market value of the stock when you want to sell it. So if you paid $5 for a stock and it's now worth $25, the appreciation is the $20 in between, and you're going to pay capital gains taxes on that difference. So just for some context here, long-term capital gains rate, so if you've held that stock for over a year, long-term capital gains rates tend to be favorable. They're either 0, 15, or 20% depending on your other income. And they're usually lower than your ordinary income tax rate. So there's worse problems to have than to have to pay capital gains taxes on something that has gain. But nevertheless, if you have a lot of shares with appreciation in your portfolio, this is something you're going to want to manage. So here's 4 ideas. Okay, 1. You can gift the shares. When you give shares of stock to another person, you're also giving the cost basis of the stock to the other person too. So if you're in a high tax bracket and you're giving the shares to somebody in a lower tax bracket, the tax consequences of them selling the shares might be much lower than for you. So this is a great idea if you have adult children and you want to help them out financially. Consider giving them the appreciated shares of stock instead. 2, you could donate the shares. So when you give shares to a charity, you're assuming you can still itemize your deductions. You'll get a tax benefit for the gift, the value of the shares, and then you also remove that problem from your situation, that tax problem. So if you've been writing checks to charities, this is certainly something to consider if you have some appreciated shares. 3rd is you can bequeath the shares. So if you do nothing and you die with the shares, then your heirs might get a step up in basis. That means that the cost basis of the shares is elevated to the value of the shares upon the date of your death. Your heirs can then sell the shares, and there's very little gain at that point. But if you do need to sell shares, there's a few things to think about. The antidote to gain is loss. So if there is anything in your portfolio that can be sold at a loss, you can pair the gains with the losses, and they kind of neutralize one another. And so that can be helpful. Another idea is if you do need to sell the shares, is to do it over time, do it over more than one tax year, so you're kind of spreading out that income. So it's not all happening in one tax year. Okay, those are a few ideas. These ideas can take some complexity to carry out. We recommend that you work with somebody a professional who has those skills. If you need more information, please go to our website, and that's all for today's BlueSky Insights.